Welcome, everybody. We've got a special guest today, Mike Marinucci from Main Street Home Loans. And Mike is going to be walking us through the mortgage assistance program through Arundel Community Development Services. It's a mouthful, I know, but fantastic program out there for first-time homebuyers, individuals looking for some assistance and grant money for down payment assistance and mortgage assistance. So really appreciate you taking some time and explaining the program to us, Mike, and kind of getting the word out.
Yeah, definitely. No, thanks for having me, Greg. And yeah, just to kind of piggyback off of what you said, it's a great program out there for first-time home buyers, and it's a great tool for lenders and real estate agents to have in their tool bag as well. So great program, and especially in this market too, as we know, it's still a very sellers-heavy market. So a lot of buyers, we're not seeing any closing cost help from sellers, and that's generally one of the biggest hurdles for first-time home buyers is the cash to close, their down payment plus closing costs. So this is a great program. You can get a lot of funds from Anne Arundel County to help reduce your out-of-pocket expense to make that barrier of entry much lower for first-time home buyers. So yeah, great program.
Yeah, and if you're caught in that, if you're kind of caught in the rent cycle, and it is hard to sometimes save up money for that down payment or the other costs attributed to closing costs on purchasing a home, this is another fantastic tool in the tool belt to help out consumers in their home buying journey. So take it away.
Absolutely. Yeah. And so the way it kind of works with the ACDS, the Arundel Community Development Services, is that they partner with lenders like me, Main Street Home Loans. So we still do the pre-approval. We still give you the first mortgage. We still get you approved with everything. It's just that the ACDS is the one that approves and gives the down payment assistance in the form of what they call a 0% deferred loan. And we'll get into all that a little bit later. But yeah, so that's how it works. We kind of work hand in hand with them. So yeah, so we'll kind of jump into it. So we'll go over who that is a little bit more. So ACDS is a nonprofit corporation under contract with Anne Arundel County to administer affordable housing and community development programs. They're HUD certified. You can do FHA loans. They're DHCD approved, so MMP, which is another down payment assistance program, the Maryland Mortgage Program. You can work with them as well too. And they only work in Anne Arundel County. So that's the only there's some other caveats, but that's the main thing, is you have to buy in Anne Arundel County. So it is area selective. You can't use this throughout the entire state like you could with the Maryland Mortgage Program, which is a different down payment assistance program. But this program does give you more funds than them. So if you're in Anne Arundel County, hey, it's a great way to go. Here's some of the program staff. So, these are a lot of the people that home buyers are going to be meeting with to go through this program. So like I had mentioned earlier, they partner with lenders like me to do the program. So we do the first mortgage, but you have to meet with ACDS if you're a home buyer, and you have to go meet with a housing counselor, and you have to go through their program and graduate from that program to be eligible for that down payment assistance funds. They call it MAP, Mortgage Assistance Program. So these are going to be your point of contacts over there. You would get partnered up with one of these housing counselors to get you through that process. Let's see. So this kind of is the next slide, the Home Ownership Counseling Program. So the HOC is what they call it. This is the home buyer program that all first-time home buyers have to take in order to be eligible for the Mortgage Assistance Program. And once you do this, they will let you know if you are eligible or not for the program. There's some other criteria that you have to meet as well too, but this is the first step here. You'd have to have this completed before you can even go out looking at homes or go under contract or anything like that. And the people that are eligible for this program, anyone interested in purchasing in Anne Arundel County, participants can't have an active sales contract while on the program. So again, this is one of those things that you want to get this done before you go out home shopping. You can't go under contract and then try to get approved for this down payment assistance. One, they don't allow that, but two, it can also take a few months to get through this home buyer education program. So they only have classes so often and things like that. So you definitely want to make sure you get this done first. There's no cost to participate. And the great thing too is it's valid for 1 year, the certification. So once you do it, it gives you a whole year to find a home. I've had clients use this, home buyers use this, and it's a tough market. They weren't able to find a home in a year. The housing counselor a lot of times will give them an extension. They'll recertify their certificate for another year without having to go back through the classes and things like that, because they know how it can be challenging in this market to find something. So you definitely want to get this done first.
And on that, well, actually, I think you're getting ready to go into it. I was wondering how long those 4 counseling sessions and what was involved with those.
Yeah, so with the 4 counseling sessions, this is kind of some more details to that right here. Okay, so after the application, after you apply, it can take 6 to 8 weeks to start the process based on timing and volume. So again, it's hard for me as the lender to say exactly what their schedule is, because this is the ACDS, they control this part. So really the best bet is if you have somebody interested, have them reach out to ACDS, have them reach out to one of those counselors right away, and they'll walk you through that process about when they have the classes, because they don't just have the classes, next week or every 2. They only have them so often. So they have the classes so often, they get so many participants in there. It's also takes a little bit longer as well too than it used to. I heard they've been kind of backed up from COVID because they were shut down for a couple of years and they couldn't take classes and things like that. So 6 to 8 weeks to start the process based on training and volume. The program requires 8 to 10 hours of education. It can take 2 to 4 months to complete. It's generally 3 hours or so, plus or minus, depending on how many people they have in the class. So it could take up to anywhere from 2 to 4 sessions to get it done. You also have to provide paperwork as well too. So the home counselor will take a look at things like what we, the lender, take a look at, like your pay stubs, your W-2s, bank statements, and they'll let you know how much you can qualify for. Having a pre-approval from a lender like me doesn't speed up the process. You still have to take all of these steps. And then, just one of their, disclaimers is just due to market conditions, affordability can be a major obstacle. So, just saying it's challenging out there for first-time home buyers still, but this program can help make a difference. But this is the biggest, I would say, hurdle, because it's the most time-consuming part. So always get this done up front, and like I said, you're good for a year.
Awesome.
Did you want to add anything, Greg, or any questions or from any of those slides?
Not from those sides. I'm sure you're going to talk about like the income limits, which changed not too long ago, and the application process. But really, just getting clarity on the what's different about the ACDS MAPS program as opposed to the Maryland Mortgage Program, and just sort of having consumers or clients wrap their heads around what their options are.
Sure. Yeah. So the first part was kind of just more about the home counseling part. Now, this is the bread and butter of the program. So the reason why you go through the home counseling certification is so you can get this mortgage assistance program, the MAP. So essentially what this is a deferred loan designed for first-time buyers needing financial assistance within Anne Arundel County. So just a fancy way of saying we provide down payment assistance for those that are eligible purchasing a home in Anne Arundel County. So eligible borrowers. So number one, you have to be a graduate of the HOC program, the HCP program, the home counseling program. You have to be a first-time home buyer. So what that means is a first-time home buyer, you haven't owned a property in the past 3 years. So maybe you owned a property 5 or 6 years ago, but you've been renting for the last 3, 4 years, whatever it is. You're a first-time home buyer again. So that 3-year window always resets. So as long as you haven't owned in 3 years, you're eligible for the program being on the first-time home buyer basis. There are some income limits. We'll get into that a little bit more in the next few slides. This slideshow is not updated for this year's income limit, so I have a separate document for that, so a PDF that we can take a look at. So just keep in mind the income limits are a little bit higher than what you're going to see on this one. And then graduates must apply for MAP to determine eligibility. So once you graduate the program, they'll put you with a counselor, they'll work with the MAP program, and they'll let you know what you're eligible for and how much you can get. And this year they've actually bumped up how much you can get. It used to be $40,000, but now you can get up to $50,000 for down payment assistance and closing cost assistance from this program. So one of the big things I do want to say though is that your eligibility letter say you're eligible for the full amount, $50,000, but that doesn't necessarily always mean you're going to get the full $50,000. They do it on a need basis, not a want basis. So if you need the 50,000, all of it to qualify, you'll get it. But if you don't need it, they're going to scale some of that back. They're only going to give you as much as you need to qualify to get into the home. So these are some of the income limits right here. And again, these are from June of last year. They actually just went up June of this year, 2023. So I have a separate one that we can just kind of hand out with this slideshow, Greg. But the biggest jump is really all the household incomes went up. So just to give you an example of the difference, 62,600 was previous. For this year, for one person, we're up to about 78,250. So most of the time, this program really only makes sense for a one-person household. Two people, in Anne Arundel County trying to buy with two incomes, you're most likely going to be over that income limit, even with three people as well, too. They do go higher and higher the more people in the home, but generally it works best with one person because it's a lot easier for one person to be under 78,000. And then whereas your household income of two, you have to be under 89,000. So it gets a little tighter as you go up. So it's not exponential of what goes up. So a lot of times it's really only makes sense for one person to be in there. Let's see. Okay. So eligible properties. So, the great thing about this is, it doesn't have to be a specific property. It can be a single family townhouse or condo located within Anne Arundel County. It has to be, one of the things that's a little bit different about this program is it has to be vacant or it has to be owner occupied at the time the offer is made. It can't be a tenant in there renting the property. So ACDS, they're never going to displace a tenant. So if the tenant is paying rent to the landlord and then you want to come and buy it from the landlord and kick the tenant out and then you move in, they won't let you do that. So it has to be vacant or owner occupied. So you're buying it from the other owner. The way you work around the tenant is, the tenant would have to move out. It had to be vacant, and then you could buy it. So they're never going to let you use the funds to, kick out a renter, if you will. You also have to pass a minimum property standards inspection. That's performed by ACDS. That's pretty similar to like what you would get as a home inspection, but this is required on their down payment assistance funds. So, as we know, Greg, home inspections, you don't have to do that, right? It's just kind of peace of mind for the buyer. But with this program, it's required and it's done by ACDS, and it's a little bit different of a property inspection. It goes into a higher scope, and those things have to be, if there's any repairs or anything that's not completed, they have to be done prior to closing the loan and prior to getting the down payment assistance funds. And what those minimum property standards are, it's essentially, they just have to comply with Anne Arundel County Property Maintenance Code and some federal laws. So some of those things include exterior finishes, gutters, downspouts, windows, handrails, lead paint, smoke detectors, heating system, electrical. So the biggest thing is these things all have to make sure they're in good standing for them to pass the inspection report. And again, they have to be completed prior to getting a full approval with ACDS and the MAP program. So what I tell real estate agents is that, if you've got a house that's livable, it's habitable, but it's going to need a lot of TLC, this might be a little bit of an issue. Not saying it's going to be a deal killer, but it could be a bit of an issue of who's going to get these things fixed, how much it's going to cost, and things like that. So when you're looking at a property that, I don't want to say distressed, but might need a little bit more help, as a real estate agent, you should be thinking up front, hey, this is we should be thinking about this and what are some of those potential issues there. Okay, so here's some of the funding conditions. Now, this actually changed as well, too, for this year. Again, this is a recent change. This is from last year's numbers, but maximum sales price is actually $500,000 now, and it doesn't matter whether it's existing home or new construction. So they've realized that obviously each year home prices have gone up and up and up. So how do they keep up with the affordability? They got to jump up their sales price, minimums, or excuse me, maximum. So it's now $500,000 for existing and new construction in Anne Arundel County. So that gives home buyers a good bit more to choose from there. Let's see, the home buyer, they have to contribute a minimum of 1% of the sales price of their own funds. So they want you to have what's called a little bit of skin in the game. So theoretically, if you buy a $300,000 house, you have to come to the table with at least $3,000 of your own money for this program. So MAP will cover the rest, but you do have to have some of your own money into it. Another thing that's specific to MAP as well too is debt to income ratio. So generally you can go up to a 50% debt to income ratio on a traditional loan program. These with MAP, you have to stay at a 45% or lower on your debt to income ratio. So that's not something that the home buyer or the real estate agent's really going to know. That's for us, the lender, that's our wheelhouse. So we'll make sure we are there. Great thing about that though is if you can get that full amount from MAP, that full 50,000, we could always put more money down to try to get your debt to income ratio lower to qualify. And then also too, MAP, they don't want you to have too much money in the bank as well too. So they're the ones that make the final determination. So even if you are eligible to get the full 50,000, again, it's a need versus a want base. So if you don't need the money to qualify to get your debt to income ratio lower, or you have too much cash reserves in the bank, if you have more than 3 months reserves, they're going to generally reduce your MAP funds. So you're bringing a little bit more money to the table. So at the end of the day, they're the ones that determine the final down payment assistance amount that you can get. So you're eligible up to this much, but they might bring it back depending on some of these different factors. And then they just want settlement to occur in Anne Arundel County as well too. So that can be at their office, the lender's office. We're in Anne Arundel County, title company office. They just want to stay in Anne Arundel County for the settlement. Let's see. So maximum loan limits, we kind of talked about this a minute ago, but again, this says 40,000. This is last year's. Again, they've bumped it up this year to 50,000 per household. So great way to go. Getting some more funds there. And then below is just kind of a breakdown of kind of how they show some of the numbers. So we have the sales price, first mortgage down payment amount. So they're like an acquisition cost. And then you can actually use the MAP funds for mortgage write-downs or buy-downs is what they call them. So you can actually buy your interest rate down some and use the part of that 50,000 to buy that interest rate down, which could be a great selling point. Get your rate lower, get your payment lower, and it's you know, it's not your money. So you're using the county's money. So yeah, why not? Let's see. So here is like a kind of a little scenario here of how a lot of people think they should calculate it. So they think that, hey, I get the full MAP assistance, the full 40,000, which technically now is 50,000, and then all these other things come off after that. So the way it actually works is the MAP money is always the last money used. So they're always going to take any seller contribution. They're always going to take your 1% contribution. If you get any other funds like from the Maryland Mortgage Program, they're going to take those off the top. So all that comes in first, and now let's say all of a sudden now you only need 25 or 20,000 from MAP. That's all you're going to get. They're not going to give you the full amount if you don't need it. So they're the last money in, and also you can't get any money back at closing. So they're not going to give you more to where you have something. You still have to bring that minimum 1%, which in this situation would be that $3,000. So one of the biggest things that I say is when I'm pre-approving home buyers, I say, hey, you can get up to this amount, but just remember that MAP, they're the final determination. So based on your assets at the time of application and at closing, because they look at your updated bank statements, pay stubs, things like that, they might reduce that number. So you might have to bring a little bit more to the table because, again, you can only have so much cash in the bank and things like that. So if all goes according to plan, you get the full amount. But, sometimes they have to back that out some depending on the situation and things like that. So that was the wrong way to do it. So essentially what I kind of described, was the next slide. That's the right way to do it. So if you notice, there's a little bit of a difference between the way the lender was doing it and the way ACDS was doing it. So you can see there's about $1,000 difference. So that just kind of goes back to that scenario about, like I said, they're the last money in. So that number could change depending on any seller contributions, things like that, any other down payment assistance. And also, Greg, I kind of wanted to hit on something with you. You had mentioned it earlier, was what's the difference between this and the Maryland Mortgage Program? So this program, you get more funds, you get up to 50,000. It's only eligible for Anne Arundel County. The Maryland Mortgage Program is another first-time home buyer program. You don't get as much money from that. You can get anywhere from 3 to 5% down payment assistance, But the great thing about that program is you can use it throughout the entire state of Maryland. The Maryland Mortgage Program has higher income limits, but they also have higher credit score requirements. So you have to have a 640 minimum credit score, whereas the MAP program, they don't have a minimum credit score. So if you're buying in Anne Arundel County and you're below the income limits, great way to go here for MAP. If you're not buying in Anne Arundel County, or maybe you are, but you're above the income limits, then we could look at Maryland Mortgage Program for some down payment assistance there as well too.
You'd still have to qualify for like the FHA qualifying criteria, right? With this?
Yeah. So you can do these loans. You can do this with FHA or a conventional loan, and you have to just meet all of FHA or Fannie Mae or Freddie Mac standards for the first mortgage, and then they supply the down payment assistance for the second mortgage. And the way that down payment assistance works too, whether it's MAP or whether it's the Maryland Mortgage Program, they're all what they call 0% deferred loans. So they're not grants. The money doesn't go away. Whatever you borrow, it kind of sits on the side. It never accrues any interest. You never make any payments on it. Whatever you borrow is always going to be the same amount, but you do have to pay that money back to either MAP or MMP when you sell the home, or when you refinance the home, or if it transfers title or something along those lines. So a lot of people think, well, how do I pay that back? Right? You're not, writing a check for that $50,000 out of pocket or anything like that. Most people are paying it back through the equity in their home when they sell it or when they refi or something along those lines. But so it's not a grant. It is what they call a 0% deferred loan, but you never make payments or it accrues interest, but you do eventually have to pay it back. And the reason for that being is because they want to help the next home buyer, right? If all the money was just forgiven, they'd kind of run out pretty quickly to help more and more people. So once they get that back, they can help out more families and more first-time home buyers and things like that.
And that just sits as a silent second.
Yeah, correct. Yep. So I've kind of hit on this again. It's a loan, not a grant. Again, pretty much everything I just said, 0% deferred loan. There's no payments. And MAP loans become doable or payable in full when either of these things happen. So also the other thing would be is at the end of your 30-year mortgage, generally first-time home buyers aren't staying in a home for 30 years, so you don't generally have to worry about that one. But yes, it does have to be paid back eventually. So here's some documentation for home buyers. So, this is something that, the lender and the real estate agent are going to walk you through. It's really, you're not going to have, being a home buyer, have to really worry about too much of this part. That's more of where the industry professionals come in. So, in order to get this loan ready for MAP, we would get a copy of the ratified contract, a loan estimate, an application, some of their documents, appraisal, the property inspection report, title work, final loan commitment from us, and then a copy of the loan commitment. So that's the process in a nutshell. We kind of get it started with some of the documentation, and you get the other documentation later on down the road when you get the title work, appraisal. But all of these things are all the same things that we, the lender, would need. The only really difference would be that property inspection report is something ACDS would need. Me, the lender, we don't technically need that. But yeah, so that's the documentation. But again, home buyers don't have to worry about that. Your agent and lender will walk you through that. And just to kind of sum it all up, here's a little bit of a timeline for the MAP. So, obviously, first step, you're going to graduate from that home ownership counseling program. Once you graduate from that, then you're going to apply for the MAP program. That's when they're going to take a look at, almost like what a lender does. They're going to pre-approve you essentially for the MAP program. So they're going to take a look at your pay stubs, your income, your bank statements, and they're going to say, hey, you're qualified for MAP. You can get up to $50,000. And again, it's a need versus a want base. So once you do that and you're eligible for MAP, what you would do is then you would come back to your mortgage lender. We would get you pre-approved on our end. You could always do the pre-approval process before you go to MAP, or you could do them at the same time. A lot of times I recommend reaching out to me first and getting pre-approved, because you want to make sure that you're good to go before you go to them, because you might get everything all ready to go and you're approved with MAP, and then you come to your mortgage lender, and then we got to work on getting your credit score up to be an acceptable range for FHA financing or something along those lines. So you can kind of do those simultaneously. Most of the time, you're going to be talking to a lender, and they're the ones that are going to tell you about the MAP program. So it's going to kind of go hand in hand. But the first thing is, though, is always start that HOC program, just because that's one that takes the longest. So once you're good there, you're eligible with MAP, you're pre-approved with your lender, and they say, hey, you're good up to this amount. That's when your real estate agent's going to take you out there, and they're going to take you out and show you homes in your price range until you find a house you like. You make an offer on it, you get a contract accepted. ACDS wants about 45 to 60 days on settlement. And the reason for that being is because after we, the lender, underwrite it and get it finalized, we have to send it to ACDS, and they have to underwrite it and finalize it and get their MAP funds available and things like that. So that takes a little bit more time in the loan process. Once we're under contract, if there's any other documents MAP needs, they look at it. We do the inspections, we get the appraisal, and the rest really is just the loan process and getting everything squared away. So this is all that's going to be handled by your professionals or real estate agents, lender, title company. We get all the documentation and our underwriting over to ACDS, and then they'll approve it for the final amount. And then they'll say, hey, everything's good to go. You're going to get $35,000. Here's your bottom line. You need to bring this amount to the closing table. And then we schedule settlement with all parties. So that's kind of it in a nutshell. This is what the home buyer certificate looks like when you get it from them as well. And that's good for a year.
Awesome. I love the timeline.
Yeah.
The timeline, like, it's important. So if you're a consumer out there, it's important to work with a lender that's worked within this program. Obviously, you're going to be working with the people down at ACDS, but I love the time frame, and you're going to be able to direct them and guide them too. They're not going to start this or go too far down the rabbit hole until you've talked to them and explain what the income limits are. Obviously, we know that this program, with the MAPS program with ACDS, has to be used in Anne Arundel County, and the grant money has been raised recently, which is fantastic, and also the eligibility of the property price too, because we know prices have been going up. So That's fantastic. So, like you said, speak with your lender. Start the home ownership counseling portion and process, then turn to, and you did a good job of explaining, like, we're all part of the team, and work with an agent. I know Shannon Brown is on the webinar today, and she's worked with ACDS, and she's currently working with a client who's finishing up the program as well. So then, the ball's sort of handed off to the real estate agent. They're going to take you out shopping, and then when you go contract to close, the title company is going to start doing a lot of that heavy lifting, and then the underwriter is going to finish up what they're doing on the loan side. So I just good overview on that. And just more, one more option we have for some of the home buyers out there that are struggling with some down payment assistance and bringing money for closing costs. So it's nice to have.
Yeah, and also too, one more thing to mention, Greg, the great thing about the MAP program too is that, unlike the Maryland Mortgage Program, their down payment assistance, you take a higher interest rate on your first mortgage for that down payment assistance, even though it's a 0% deferred on your first mortgage, has a higher interest rate. On this MAP program with ACDS, there's no hit on the interest rate for the down payment assistance. So you get whatever the current market interest rate is. You're not getting an above market rate like it would be for the Maryland Mortgage Program.
Awesome.
Yeah. But yeah, that pretty much sums it all up. The last slide is just some of their community partners and things like that. But, ACDS, the office is where you would do like the home buying HOC program and things like that. But yeah, first step is always reach out to them, and they're pretty easy to get to. They have a website, shoot them an email, give them a phone call, and they'll get you on track with getting the classes scheduled and getting you in there.
Awesome. And if someone was looking to touch base with you, Mike, what would be the best way for a consumer to get a hold of you?
Yeah, so, I'm Mike Marinucci. I'm with Main Street Home Loans. We're a local lender. We're in Severna Park, Maryland. So we do a lot in Anne Arundel County. That's how we know about this program. But we can do all of Maryland. We could do other states as well, too. But yeah, best way to get a hold of me, phone call, email. You can check out our website. Greg, I don't know if you can maybe put that in
Yeah,
the link when you send it out. My email's kind of long, so a little easier that way. But cell phone 443-867-3671 is the best way to get a hold of me. Text message is a great way as well too. But yeah, definitely.
I really appreciate your time, Mike, and I will make sure that we have your contact information in the when we're sharing it to the community at large and the consumers and clients that we're working with. And if you guys are also, if you're on the webinar, you see the recording of the webinar, feel free to reach out to Shannon Brown, one of our agents who has experience with this program as well. She can help guide you on the realtor side of things as well. Like we all work together with our lending partners in conjunction with title to get you across the finish line. So appreciate it, Mike. As always, a wealth of information, and we will be in touch.
Awesome. Thanks, Greg.
All right. Take care.